Hey guys, in today's video I'm going to talk about the 4 biggest mistakes that credit spread traders make that are leading to them losing more, and not only that, but having a lower win rate, so therefore not being profitable in the long run. So if you're a new credit spread trader or you've been trading for a while, make sure you take note of these biggest mistakes. Number one, and most importantly, because this is the one I see the most, credit spread traders just assume that credit spreads have a high win rate, so they should trade them regardless, and yet they do not know their numbers. If you don't know your numbers, your trades could be leading you to your account being blown up instead of actually growing, because you need to know what is your win rate and how much money are you making for every trade. Don't just assume, oh cool, yeah, credit spreads are a high probability trade, I'm gonna make money and grow my account. That's not true. That's not how it works. Let me walk you through the numbers here. Okay, this is called a long-term positive expectancy calculation. There are only 2 numbers you need with credit spreads. That is your win rate and the amount of money you make when you win. Now again, if you click the link down in the description, you can actually figure this out for yourself. I realized I should have showcased this earlier, that I built a free credit spread tracker. Again, anybody can use it. But again, it shows your trade history, and you can get your accuracy and your average win per trade with that. So again, you can do that there. Anyways, enough about that free tool. But let's take a look at this. Okay, so once we know our win rate, so we need our win rate, which again is the number of winning trades you've had out of the total trades you've made. And so again, then we have our how much credit we collect for our winners on average. Okay, I'm going to give you my average stats, okay? So my average win rate, as you just saw, is a 94%. 94% win rate on my credit spreads. What is my average collected credit? My average collected credit is 25 cents. On average, I collect 25 cents. So, okay, cool. So now that I collect 25 cents on average with a win rate of 94%, now how do I determine if I'm going to make money long term with this approach? Well, what you do is you take your win rate, so 94, you multiply that by the credit, so just do 0.25. So this means, let's say out of 100 trades, 94 of your trades will make 25 cents. Cool, so that's for the winners. Now what's our losers? Well, if out of 100 trades you win 94, that means you lose 6, so minus 6 times the size of our loser. What's the size of our loser? Well, if I collect 25 cents on average, that is because I'm trading $2 wides. So a $2 with a $2 wide spread, that means a $2 spread minus 0.25 gives me my max loss. So it's $1.75 as my max loss. Now, if we plug this into a calculator, we can see if this will work out long term. So let's check this out. 94 times 0.25 minus 6 times 1.75. Look at that. I have a positive 13.13. Anything above 0 means you're going to be positive long term. 0 means your account's going to stay the same. Negative means your account is going to lose value over time and continue to get smaller. My recommendation is aim for a positive 5, anything greater than 5. Right here, this is almost 3 times 5. That means that I'm going to have a very positive long-term growth in my account because of my win rate and my credit. Again, this tells you everything. Know this formula and apply it to everything. Because again, if you have a positive long-term expectancy, you'll make money in the long run. I know so many traders who think they're doing well or they're trading a strategy that works, but they don't know their numbers and it never works out for them. All right, the rest of these things or mistakes that I'm going to share with you in today's video have nothing to do with math, so don't worry about that. This is the first and only math heavy thing. All right, let's dive into number 2, which is called liquidity. So a lot of people do not understand liquidity. Guys, just like the stock market, where in order to get into a stock, somebody needs to sell it to you, and you need to buy it from someone who's selling. And when you're trying to get out of a stock trade, you need to sell it to somebody who's willing to buy. There's always a transaction. There's somebody on this side and there's somebody on this side. The same thing works in the options world. There's somebody on this side and somebody on this side. If you're trying to buy or sell and there's nobody on the other side, you're not going to get in or out of that trade, and that is very bad. right? So we need to look at liquidity. So this right here is the Tastytrade's platform browser version. Again, but this is shown on any broker. Again, when you're on the options chain of any broker, you can edit the columns. Edit it to be volume. Just like this. You can see how many options were traded that day. Now again, this resets every single day. So if you're looking at this at market open, it's probably going to say 0. Or, a minute before market open, it's going to be 0. So what I like looking at is open interest, since volume resets every day. Open interest is the amount of contracts currently open for that strike price. So you can see here there's 15.6 thousand shares open. This is annoying. 15.6 thousand shares open. Wow. Never had that happen before. 15.6 thousand shares available, which means that if I'm trying to get in with 10 option contracts, then I'll have no problem, because that's 15.6 thousand. It's a very small percentage of the total open interest. Now, what is the bad stock? Well, let's take a look at McDonald's. It's going to get a little worse here. Wait for all the data to populate. Here we go. Open interest 0, 0, 0, 0, 15, 32, 281, 72. You see how hard this is going to be to enter and exit a credit spread trade or an options trade when you have an open interest like this? There is no volume, no one here to take the other side of your trade. You may be able to get in and get out, but you're gonna have to do a super wide spread from where the bid is currently trading. So in the long run, you're going to lose a lot of money. Make sure you're trading something that has a lot of open interest and a lot of volume. Okay, next, the biggest mistake is strategy. I know people who do not know proper strategy. They're like, oh, well, I can do this and this. I've seen this on Tasty Live, or I've seen some YouTuber talk about this. What you want to look for in a strategy, number one that has been back tested and is proven to work, right? You have a back test, you see that it works. And number two, something where you see that it works but can also match your trading style. If you work full time, there are going to be a lot of strategies that just do not work for you. It's going to add stress, you're going to try it, and you're not going to execute it correctly, and you're going to lose. So make sure it matches the amount of time and your lifestyle that you have, right? So after that, once you know it works, once it matches your lifestyle, make sure you dive deep on understanding that strategy at a fundamental level. Big picture, why exactly does this strategy work? Can I simplify it and explain it to a toddler? If you can't explain the strategy to a toddler, then guess what? It's not going to work, because simple strategies make the most money. I've been in this game for 6 years, and that's typically how this works. So my strategy, if I were to explain it to a little kid, would be, well, I look at a graph and I go, is it going up, or is it going? If it's going down, if it looks like it's going up, then I sell a put credit spread. If it looks like it's going down, then I sell a call credit spread. And that's how simple it is. Again, there's some more specifics to it, but that's the high level of it. Okay, and you can see just like that here. Wow, that's getting annoying. Anyways, whatever, here we go. So we have the moving average line. If it's above it, the market's going up, so we sell put credit spreads. If the market's below it and it's going down, that's selling call credit spreads. But again, if you want these specifics on it, I have a free trading handbook. No email, no nothing required. I'm giving it to you. This handbook is quite large and goes over my entry rules, my trading sites, my exact strategy, step by step, how to implement them. So for instance, what the strategy is and what market it works in, the entry rules step by step, the video if you want to watch that, and a complete back test. So all that is here for you if you struggle with strategy. All right, last but not least is patience. A lot of you guys think you're going to become winners overnight, maybe in the next year or whatever. You need to understand this is a game that, yes, can be won, but it is a consistent journey and a consistent process, and it will take time. If you're following a strategy that works, like the strategies that I just gave you, then you will be able to speed up your returns quite dramatically, because you'll be able to skip all the stupid mistakes that I made in the beginning and that others make and a lot of new people make. So you'll be able to skip that. So that's good, but it still will take some time. Most of the traders that I teach settle into this strategy in about a month or two, and then on month 3 they're flourishing and they're doing it and they don't need any help and they're making money. So again, it's all about the process you follow. Anyways, guys, I hope you take heed of those mistakes, kind of learned from them, and are able to continue growing growing as a credit spread trader. That's what this channel is for, to help you be a better credit spread trader. Anyways, if you enjoyed this video and learned something, please smash that thumbs up button and subscribe button, because I make videos like this all the time. Anyways, my name is Austin. I'm here with 10% credit spreads, and I'm so excited you watch, and I'll see you in the next video.